Insurance is unique. It's something we pay for, not because we want to use it, but because we hope we never have to. It's a product built on the idea of preparing for the worst, even as we wish for the best. We tuck away our policies, crossing our fingers that they'll gather dust, untouched for years. You buy car insurance, but you don't want to crash. You drive carefully, hoping every trip is uneventful. You pay for home insurance, but you hope your house never burns down, floods, or gets broken into. It's a paradox, spending money to protect against disasters we hope never happen, investing in a safety net we hope never to use. Unlike most purchases, insurance is about peace of mind, not enjoyment. It's about sleeping soundly, knowing you're protected. The real product is a safety net, a promise that if disaster strikes, you won't be financially ruined. It's a contract built on trust and hope. Imagine a family buying their first home. They celebrate, but also take steps to protect their future. They pay for insurance, not for a thing, but for the ability to sleep at night, knowing they've done what they can to shield themselves from the unexpected. Insurance is a calculated bet. Pay a small known amount now to avoid a huge unknown loss later. It's a trade-off between certainty and risk. It's not optimism, but realism, an answer to life's unpredictability. We can't control everything, but we can prepare. Accidents, storms, and illnesses happen. Life throws curveballs when we least expect it. Insurance is our plan for the unknown, a way to face uncertainty with a sense of control. We invented it to face randomness with a strategy, not just fear. It's a tool for resilience, not just a cost. The payment is real, but the benefit is invisible, until you need it. It's a quiet kind of security, always there in the background. In insurance, winning means you never have to collect. The best outcome is nothing happens at all. That's the paradox at its core, paying for trouble you don't want, and hoping you never get your money's worth. At its core, insurance is a contract, an agreement between you and a company. You pay a premium, which is a set amount of money, in exchange for a promise of protection. The company promises to cover certain losses if something unexpected happens, like an accident, illness, or disaster. But insurance is more than just paperwork or legal language. It's a practical way to manage the risks that life throws at us every day. Insurance lets you transfer the burden of risk to someone else for a predictable cost, giving you peace of mind. Instead of facing a huge, unpredictable loss that could derail your life, you pay a small, regular premium that fits into your budget. This system works because of the law of large numbers. Insurers pool together thousands, sometimes millions of similar risks from people just like you. By analyzing data and trends, they can predict overall losses with surprising accuracy, even if individual events are unpredictable. They spread the cost of rare but devastating disasters across many people, so no one person bears the full weight alone. Socially, insurance is a form of mutual aid. Everyone chips in, creating a safety net for the whole community. When disaster strikes, those who suffer a loss get help, supported by the contributions of many. It's a community safety net, built on trust and shared responsibility. Philosophically, insurance is our way of imposing order on chaos, preparing for what we can't control, and making the unpredictable a little less frightening. Insurance turns fear of the unknown into a manageable problem, offering relief and a sense of control. It's about responsibility, planning, and taking action, not just hoping for the best, but preparing for the worst. We can't control fate, but we can control how we prepare for it, and how we protect ourselves and our loved ones. That's the real power of insurance. It empowers us to face the future with confidence. Insurance is a tool for turning uncertainty into security, and for building a foundation of stability in an unpredictable world. The idea of sharing risk is ancient. In Babylon, the Code of Hammurabi forgave loans if a merchant's caravan was robbed, an early form of insurance. Maritime traders in ancient China and Greece used bottomry. If a ship was lost, the debt was cancelled, paid for by higher interest. In the Middle Ages, guilds pooled resources to help members recover from disasters. It was community support, not business. Modern insurance began in 17th century London at Lloyd's Coffee House. Merchants and underwriters gathered, sharing risks by literally writing their names under contracts. This system evolved into Lloyd's of London, the world's most famous insurance market. From ancient times to today, the core idea remains. Share risk, so no one faces disaster alone. Insurance is a social invention, born from cooperation. It's how we've always faced uncertainty, together. That's the legacy behind every policy. Insurance relies on a few key principles to function. First, utmost good faith. Both sides must be honest, no hiding information. Second, insurable interest. You can only insure things whose loss would hurt you financially. Third, indemnity. Insurance restores you to your previous position, not better. No profit from loss. Fourth, contribution. If you have multiple policies, insurers share the payout, so you can't collect twice. Fifth, subrogation. After paying your claim, the insurer can pursue whoever caused your loss. Sixth, loss minimization. You must take steps to limit damage even if you're insured. These rules keep insurance fair and sustainable. Without them, the system would collapse under fraud and abuse. They ensure your insurance is about protection, not profit. That's how the promise stays strong. It's a system built on trust, responsibility, and shared risk. And it works when everyone plays by the rules. Insurance is more than a payout after disaster, it shapes our society. For families, it's financial security and peace of mind, freeing us to take risks and plan for the future. For businesses, insurance makes investment and innovation possible. No one would build or lend without it. It's the invisible foundation of our economy. Insurance also drives safety. Companies offer discounts for safe behavior and encourage loss prevention. This makes our world safer, from homes to workplaces. Insurance companies invest the premiums they collect, fueling economic growth and job creation. Your small monthly payment becomes part of a massive financial engine. Insurance mobilizes capital, funds infrastructure, and supports progress. It's a quiet force behind prosperity. Without it, our modern world wouldn't function. That's why insurance matters to everyone. Insurance comes in many forms, covering nearly every risk. There are two main types: life insurance, which protects against the financial impact of death or disability, and non-life, property and casualty insurance, which covers things you own. Personal insurance includes auto, home, health, life, and disability policies. These protect individuals and families. Commercial insurance covers businesses, property, liability, workers' compensation, and more. Specialized policies exist for everything from cyber attacks to crop failure. Even insurance companies buy insurance, called reinsurance, to protect themselves from huge losses. If there's a risk, there's probably a policy for it. Insurance adapts to new threats, from data breaches to space launches. It's a vast, flexible system. Whether you're a homeowner, a business, or a farmer, insurance has you covered. It's protection tailored to every need. That's the diversity of the insurance world. There's a policy for almost anything. Insurance isn't just financial, it's psychological. It quietly shapes the way we see the world, influencing our decisions and emotions in ways we might not even notice. It gives us peace of mind, letting us plan for the future without fear of ruin. With insurance, we can focus on our goals, knowing that unexpected setbacks won't completely derail our lives. Prospect theory shows we fear loss more than we value gain. Insurance eases that anxiety. The knowledge that we're protected helps us sleep better at night, reducing the constant worry about what could go wrong. By paying a small premium, we avoid the stress of a big, unpredictable loss. This trade-off feels like buying peace of mind, and for many, it's worth every penny. This mental comfort is a huge part of insurance's value. It allows us to take calculated risks, pursue dreams, and support our loved ones with greater confidence. It encourages us to invest, borrow, and build, knowing we're protected. Insurance acts as a safety net, making it easier to start a business, buy a home, or try something new. But insurance can also change behavior, sometimes for the worse. When we feel shielded from consequences, we might act more recklessly than we otherwise would. Moral hazard means people might take more risks when they're insured. This can lead to more accidents or claims, which ultimately affects everyone in the system. That's why insurers use deductibles and co-pays, so you still have a reason to be careful. These features help balance protection with personal responsibility. Adverse selection is another challenge. those most likely to need insurance are most likely to buy it, which can drive up costs for everyone if not managed well. Insurers use underwriting and broad participation to keep the pool balanced. By spreading risk across many people, insurance remains affordable and effective. Insurance shapes how we think and act, reducing fear, but also requiring careful management. It's a tool that empowers us, but it works best when we understand its limits and responsibilities. It's a powerful force in our lives, quietly guiding our choices and helping us build a more secure future. Insurance is one of humanity's greatest inventions. Its purpose, to turn fear into planning, chaos into stability. Without insurance, every risk could mean total ruin. Insurance spreads the impact of disaster across millions, making recovery possible. It's the shock absorber of society, softening the blow of hurricanes, fires, and accidents. It enables progress. Mortgages, businesses, and innovation all rely on insurance. When disaster strikes, insurance helps communities rebuild, not collapse. It's a collective promise: if one of us falls, the rest help them up. Insurance doesn't erase risk, but it tames it. It lets us live boldly, invest, and dream. It's always working in the background, holding society together. That's the grand purpose: security in an uncertain world. How do insurers decide what you pay? It's all about actuarial science. Actuaries use data and statistics to predict future losses and set premiums. They analyze everything: age, driving history, health, even your zip code, to build risk profiles. The goal estimate claims, add business costs and profit, then divide the total among policyholders based on risk. It's complex math, but the idea is simple: use the past to predict the future. This keeps insurance fair and sustainable. The price you pay is one of the most data-driven numbers in your life. Actuaries are the engine behind the promise. Next time, we'll dive deeper into how these models work. Insurance is a world built on numbers, trust, and shared risk. That's the science behind your peace of mind.